Rise and grind, trading family. It's Tuesday, Memorial Day week, and this morning the market got two headlines that said the exact opposite thing, and it picked a side anyway. The United States says we're inching toward a deal with Iran. Iran's foreign minister says it is not imminent. Same morning, both camps talking to the press. Stocks up, oil down, crypto ripping. The market is all in on resolution. I've got a receipt that says otherwise.
Quick disclaimer before we get into it. Nothing we say here is financial advice. We're two guys reading the tape. Trade your own book.
Gold is sitting at $4,523. Flat. 5 days straight. That's the tell. When a geopolitical deal is actually coming together, gold sells off. It moves before anything else moves. 5 days of gold sitting completely still means the smart money is not buying this narrative.
The reason I can't get on board with inching toward a deal is the actual numbers inside the deal structure. Iran is asking for $100 billion in sanctions relief. The United States has offered somewhere between 20 and 25 billion. That's a $75 to $80 billion gap. That's not a negotiation in progress. That's two parties who haven't found the starting line yet.
And here's what that means for Tuesday. If futures gap up tonight on more optimism language, traders are probably fading that open. The bad news was priced in weeks ago. The good news is already priced in now. Classic sell, the news setup.
A gap that wide doesn't close over a weekend on back-channel signals. I'd be very careful chasing anything that opens on Iran headlines alone.
Trump said he's in no rush. That's either confidence or distance. Either way, it is not urgency. And urgency is what closes deals. Gold flat. $75 to $80 billion gap in the actual structure. President relaxed about the timeline. The market believes resolution is coming. The data does not. All right, let's talk about the American consumer. Because the consumer and the stock market are having two completely different conversations right now. Michigan consumer sentiment came in at 44.8, down from 49.8 prior. Worse than the 48.2 preliminary, lower income households hit hardest. The SPY is near all-time highs. Consumer confidence is near all-time lows. Both of those cannot be true indefinitely. Which brings me to tomorrow morning. AutoZone, ticker AZO, reports pre-market. Estimate is $36.09 per share. This is the earnings honesty tax. When sentiment is in the basement, does the auto parts consumer actually show up? People still need to fix their cars. The question is whether they've got the cash to do it right now or whether they're letting it slide.
WaveTrader doesn't have a signal on AZO going into earnings. Elevated uncertainty around the number. I'm watching the revenue line more than the beat. That tells you if the consumer showed up at all.
One number. Revenue is the read. Everything else is noise.
I want to walk through what I think is the most underreported macro story on the board right now. The European Central Bank is hiking rates in June. That's a done deal according to Unicredit analysts. Christine Lagarde has revised her inflation forecast up to 3%. Same month. Kevin Warsh steps into his first Federal Open Market Committee meeting as Fed chair. Two of the three largest central banks in the world tightening in the same month, moving the same direction simultaneously.
That's not a footnote. That's a regime shift.
Bond strategists have gone on record saying yields stay elevated even if the Iran conflict ends tomorrow. The inflation pressure isn't coming from oil. It's structural, supply chain rebuilding, defense spending, reshoring. Those don't go away because one situation de-escalates.
And that's where I've got a receipt that keeps me up. Small caps. The iShares Russell 2000, ticker IWM, are at $285, up almost 4% in 1 week. That is aggressive rate cut pricing. The Russell 2000 is the most rate-sensitive major index on the board. If Warsh holds or hikes at the June Federal Open Market Committee, small caps get hit first and hardest. The head fake is already in the chart.
Here's the punchline for everything we just built. Thursday morning at 8:30 a.m. Core personal consumption expenditures, CC, plus gross domestic product, GDP, plus personal income and spending. All three dropping simultaneously 1 hour before market open. Core PC is the Federal Reserve's preferred inflation gauge. Warsh's first Federal Open Market Committee is 3 weeks from that number. If PC comes in hot Thursday, the June hike thesis goes from maybe to definitely. If it comes in cool, the market gets to keep dreaming about cuts. Thursday morning at 8:30 is when we find out if this entire segment was right.
Circle it. Set an alarm. Thursday is the week. Quick one before the close. Don't sleep on this. Huawei announced a new chip process that closes a 5-year gap with SIMC. They're targeting 1.4 nanometer by 2031. SIMC is targeting 28. The export restriction moat that protected United States chip companies. That moat is getting tested. I've got Broadcom, ticker AVGO, and Advanced Micro Devices, ticker AMD, in my book. I'll say that once and move on. But here's the read. And this is not the scary framing, this is the correct one. When Huawei closes the gap, the hyperscalers don't slow down. They speed up. They need to stay 2 to 3 generations ahead, not one. Competition in chips doesn't kill the artificial intelligence arms race. It accelerates it. That's bullish capital spending, not bearish moat erosion.
One thing I want to add. NVIDIA, ticker NVDA, is trading below $218, which was a key support level flagged in a recent stocked up video. There's money rotating toward quantum names. Worth watching where it lands. Marvell Technology, ticker MRVL, reports Wednesday after hours. That's your custom silicon follow-through. Companies building for customers who can't afford to wait on anyone catching up.
Marvell Wednesday is going to tell us a lot about enterprise artificial intelligence demand that doesn't run through NVIDIA directly. That's the number I want to hear. All right, let's land this. Here's what we're watching the rest of the week. Tuesday, pre-market, AutoZone. $36.09 estimate. Revenue is the read. Consumer honesty test. Tuesday, after hours. Zscaler, ticker ZS. Cloud security. Cybersecurity spend has been resilient. Let's see if that holds when budgets are tighter. Wednesday, after hours. Marvell. Custom silicon, artificial intelligence infrastructure. Most important earnings of the week that isn't Thursday. And then Thursday at 8:30 a.m. 4. C. GDP. Personal income and spending. Everything TB built in segment 3. That's the verdict. If you set one alarm this week, set it for Thursday morning at 8:30. 1 hour before open. Before I go. This is Memorial Day week, and I want to take 1 second and actually mean it. To everyone who didn't make it home, and to every family with that empty chair. We see you. That's all I've got. Thursday morning, Core PC drops, and one side of this trade has to show their hand. Gold or small caps, one of them is wrong. We'll find out together. Until then, may your convictions be stronger than your FOMO, and your exits cleaner than your entries. See you Wednesday, trading family.